Close curtains down on the June expiry session. The last 5 have been positive for us. Will this be the first negative series that we will see in 2017? Yogesh Radke, the head of quantitative research at Edelweiss Securities, joins in now. Good morning, Yogesh, and thanks so much for joining in. At least as of D-1, the rollovers have been higher for the Nifty as well as market-wide rollovers. What does it tell you, and what is the positioning as we enter into the expiry day?
Yeah. Hi, morning, Arima. Market-wide rollovers have been quite well, around 60% on a high base of around 1,40,000 crore upon open interest. We believe that market positions have been carried forward into the next series. Undoubtedly, at a higher level, the caution is quite high, and as you rightly mentioned, that we had 5 consecutive positive expiry series closing. Today, if we close below 9,500 odd, we may have the first negative closing. Now, something coming to the options positioning. Option positioning shows that some amount of call writing has been done at the 9,500 level, and the lower band could be around 94. So we may see somewhere the expiry around 94.50 odd levels. So we could see the first expiry after the last 5 expiries having a negative close marginally.
Yogesh, good morning. This is something we saw last series as well. There was a risk of negative series, but then we had that huge rally on expiry day. 95.50 call yesterday added about, I think, 10.5 lakh shares in open interest, premium at 8 rupees. Is there a chance of, short covering if we start to see a move? The global cues are positive this morning. If we start to see a move towards, say, 95.30, 95.40? Or do you think 95.50 would act as a big resistance?
At least at this junction, 9,500 could be a resistance for the market. We surely have the global positive views at this junction, which may keep the market in positive tone. But largely, the open interest is concentrated on the 9,500 and 9,400 level. So 95 is surely there, but I think the larger open interest is still sitting on 95 and 9,400 levels.
In terms of individual stocks, Yogesh, what kind of moves do you expect on the VWAP front? Any stocks to watch out for?
Surely not very stock specific, I'll go. But a couple of counters where rolls have been lower and the roll cost has not been expanding. We may see some amount of selling pressure there. The average roll cost has been around 52 basis points. Counters wherever the roll cost is below 45 basis point or 47 basis point, we are seeing some amount of resistance from the arbitrageurs to roll their positions. So they may opt to unwind the positions if roll levels don't pick up in today's trading session. But largely we have seen on the last day with the most of the compulsory rolls being done, the roll levels expand and where the arbitrageurs are able to roll their positions. We do expect a higher roll percentages this time also in spite of a high base.
As of now, if you could tell us which are the stocks where the roll levels have been on the lower side and there is a possibility of selling pressure coming through in the last 30 minutes?
A couple of bigger names. SBI has been having as a low roll cost, followed by even Z Entertainment has low roll cost. Even L&T has levels are quite subdued today. So in today's trading session, if they expand, the selling pressure could go off. But largely, as I said, that the counters where the roll costs are subdued, there the arbitrageurs are finding difficulty to roll their position, may come to opt to sell in the last half an hour.
Okay. And what about the contours for Bank Nifty, Yogesh? Because, Nifty is looking like, as you said, 9,500, 9,550, clearly resistance. And a good chance of negative closing, but on the Bank Nifty, because it's it's an index which can move by just 1 or 2 stocks. So in that sense, any contours here?
Right, see, as I said, that SBI is somewhere where the positions have not been, the roll cost has not been that great for the arbitrageurs. SBI drives also is in quite a high weightage in the Bank Nifty. So we may see some pressure. So it's all dependent upon the components of the Bank Nifty. SBI may see some amount of selling pressure. Bank Nifty may also be under pressure.
Okay. Yogesh, the biggest gains this series have come in the pharmaceutical names, led by Aurobindo Pharma, but even Sun Pharma has gained close to about, what, 8-9% this series. Will the optimism continue in the coming series as well, July?
Pharma sector has given a bounce back after a huge amount of sell-off. So we saw, as you rightly said, Aurobindo Pharma, there was a short covering which led to the rally. The OI has dropped down by around 8-odd%. When the stock moved up by around 27-odd% expiry to expiry. Similarly, if you see Dr. Reddy's also same situation. So these are counters where the short covering has supported the prices to inch up from the lows. We may see some amount of continuation, but larger story still remains a concern over the pharma sector as a whole.
Finally, what are you spotting in Reliance, Yogesh? Because, you know, it made a big move, and then for the last 2 days, we have seen quite a bit of profit taking.
Yeah, Anuj. Again, not going to the stock specific.
Sure.
Just, I would like to highlight certain points. We have this in-house indicator, which is the leverage index, wherein we look at the stock future open interest versus the overall market open interest, where the leveraging is quite high versus index being used as a hedging tool against it. This index has hit around 77% mark at around 75-80 levels. Market does see a correction whenever this index hits the 78-79 level. So some amount of caution surely has to be looked forward, given the leverage position in the market is quite moved high.
Okay. Just one more word on India VIX, Yogesh, because and the put call ratio. Any indications from there?
Anuj, over the time frame, the levels of VIX, also there is a realized volatility, which is the actual index volatility, and the implied volatility. Both have come down. Normalcy, like in the past, we used to see 15 and 20 was the range. Now it has dropped down there, like 10 to 12% is the level. I believe, though, that the VIX may still languish in these levels, and the new range for these ones should be around 10 to 15. That would be a larger range for the VIX index, which you used to see at 20-25% also. So I would say that VIX index may still languish at these levels. We have to, if any significant negative event comes, then only this VIX would move up. But I don't find this to really shoot up significantly in the upcoming days.
Okay, Yogesh, thank you very much for joining in and laying out the picture.